AMD, or Advanced Micro Devices, one of the leading companies in the semiconductor industry, has reported mixed results in 2022. The company revenue has increased by 45%, but its net income has decreased by 58% year over year. The stock price has gone up by an impressive 61% year to date. Today we'll take a three-step approach to thoroughly evaluate the company and determine its fair value. In step 1, we'll be looking at AMD's key metrics and ratios to determine if we should be more or less cautious when determining a fair value. Here we'll delve into AMD's financial statement and assess critical metrics and ratios. In step 3, we'll be using a combination of valuation models such as discounted cash flow and Graham's valuation to gain insight into the value of AMD's business. By using these methods, we can determine whether the stock is currently overvalued or undervalued in the current market based on different metrics. In conclusion, by combining the findings from the 3 steps, we'll ultimately determine the fair value of AMD as an investment opportunity. To determine this final valuation, we'll be using a margin of safety. This margin of safety will be based on financial ratios, the financial health, and the growth of the company, and we'll be using a standard margin of safety of 20% that can never go below 0%. The margin of safety can either increase or decrease based on the ratios that we're going to look at in just a moment, and the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 columns in a scale, bright red will mean a 5% increase, orange will mean no change, light green mean a 5% deduction, and bright green mean a 10% deduction from a margin of safety. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green mean a 5% deduction. The first metrics that we'll be looking at are the margin and EBIT growth. The EBIT has gone up over the years, going from $127 million in 2017 to $1.2 billion in 2022. The average EBIT growth is 103%, which is a 10% deduction from a margin of safety. Looking at the margin, it has gone up all the way from 2.4% in 2017 to over 22% in 2021, but coming back down to almost 5.4% in 2022. Still though, it has seen an average margin growth of 51%, which is way past our scale, indicating a 5% deduction in the margin of safety. The final 2 ratios that we'll be looking at are the debt to EBITDA and return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it, and divide it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the company to pay off all of their debt. And as we can see in the graph for AMD, we can see that their cash position is currently greater than their debt position, meaning that they can pay off all of their debt with their current cash position. This indicates a 0% debt to EBITDA ratio, which is a 5% deduction from a margin of safety. The return on invested capital is not looking very great for AMD, with a return on invested capital of only 1.5%, indicating that the management hasn't been very effective at allocating capital recently. This awards them with a 5% increase in the margin of safety. Looking relatively good so far for AMD. Let's go look at the valuation models next to determine the intrinsic value of the company. The first valuation model that we'll be using is the discounted cash flow model. I've imported the free cash flow of AMD going from 2019 to 2022. The average growth in their free cash flow annually during this period has been sitting at almost 250%, and I'm projecting their future free cash flow to grow by 24% annually for the next 10 years. With this percentage, we'll determine the future free cash flow for AMD and determine a terminal year of valuation using a perpetual growth rate of 3% and a discount rate of 9%. This leaves us with a sum of free cash flow of almost $213 billion. And to get an equity value, we have to add the cash and equivalents and subtract the debt, giving us an equity value of almost $216 billion. Dividing this by the amount of shares outstanding, we get a discounted cash flow price per share of $134.15, which is an over 32% upside from the current price. The second model that we'll be using is Graham's revised valuation formula. In this model, we take a look at the earnings per share that AMD is generating, the growth rate estimate projected by Wall Street, and the current yield of AAA corporate bonds in relation to the average yield of AAA corporate bonds, always sitting at 4.4. And we go by the theory of Benjamin Graham that a PE of a company with no growth should never exceed 7. And looking at all of these metrics, we get a fair value of $73.84 out of this model, which is a 27.3% downside from the current price. And the last model that we'll be using is the mean reversion theory. In this model, we go by the theory that a company will always trade above or below its mean, and the metric that we use to determine this is the PE ratio. In this case, we've imported the PE ratio of the past 5 years, and on average, it has been sitting at 57.31, while the current PE ratio is sitting at 43.08, meaning that it's currently undervalued by this metric, which gives us a fair value of $135.10, which is an upside of over 33%. Let's go look at the final overview of our valuation next. Looking at the final overview, we've imported discounted cash flow, Graham's valuation, and the mean reversion theory price per share, giving us an average of $114.36. A margin of safety we've determined earlier, using a standard margin of safety of 20%, deducting by 5% for the debt to EBITDA and margin growth, adding 5% for return on invested capital, and deducting another 10% for the EBIT growth, giving us a margin of safety of 5%. Applying this margin of safety, we get a fair value of $108.64, and with the current price of $101.55, we get an upside of just under 7%, indicating that's currently a buy per our valuation. If you want to get access to all of the models I use in my videos and much more, you can check in the description for my Patreon link. And if there's any other companies that you would like to see me cover on this channel, please let me know in the comments. Thanks for watching.